Hi, this is Jiman Trading Community, and my friend, we are on sport investing. And from our previous video, which we dived into sport investing, whereby we said that sport investing is investing direct to the in the assets and owning them. We found out that every asset has its own way of trading, its own broker it is in terms of investing. And on our list, if you could remember, one of our asset is Forex. We want to dive into Forex and see how we can interact with these assets in terms of investing. So in our introduction video, we learned that Forex is foreign exchange. That's just a short form of the word foreign exchange. It's the global market where currencies are bought and sold. So the reason it exists because countries, companies, bank, travelers, governments all need to convert their currency into another for business and trade. Currencies are always traded in pairs. For you to know even a strength of a currency, they need to be in two. For your currency to be known its value, they need to be two to see their buy power. So the first currency is called the base currency. The second is called the quote currency. For example, Euro USD, USD JPY, GBP USD. So Euro is the base and USD is the quote. USD is the base, JPY is the quote, pound is the base, and USD is the quote. Knowing that every currency stands on its country economy, now when trading, you will invest on the stable currency, which you think it will appreciate against the other based on its buy power and its aspect. So when we are investing in Forex, we buy mostly the currency that we see it would be very, very stable and its economy it's very powerful, and we see that over time it will appreciate, because when it comes to investing we said that it's all about future. So you can invest in euro, hold your money in euro, in dollar, or in pound. So the aspects that affect mostly the currencies is the interest rate, inflation, economic news and politics, supply and demand. So we can see that all we know is that USD is a global currency. This is a currency that you use to buy globally. Anything that is outside your country, if you are in Kenya, for example, you want to buy something outside country, it's always labeled in dollar prices. So, but for us to see whether the currency would be very strong, we look at the interest rates, which affect so much the currency, the inflation, economic news, politics, the price so much, and supply and demand. Example, I'm in Kenya. If any of the listed aspect affect my current country currency, I look for the most reliable currency like USD, pound, or euro to buy them. So if we are in a political chaos in the country, you always hold the global currency, because that's the one which will not inflate so much and it won't lose its value so much. So that's how I would invest when it comes to uh, currencies. Let's go to page 2. So for many, for anyone to make reasonable profit in this sector, you need large amount of money because currencies don't move big. Every country is fighting its money value to maintain strength. Hello, my friend, have you heard? So for anyone to make a reasonable amount, we need a chunk of money. We need a lot of money to buy one currency at a large volume and to sell later so that we can see a reasonable profit. Why? Because those currencies, they don't move so much, because every country is fighting for its currency to maintain stability and strength and protect themselves in the global trade when buying and selling. So, if we are buying crude oil outside the country and our currency is inflated, we'll have to pay a lot to get that product. So, every country is maintaining its currency strength because when it comes to buying, they won't spend a lot of money to buy those goods outside the country. And that's the reason. So you need a lot of money when trading in currency. So let's go on. Uh, if you if you want to invest in forex, the broker in this sector are the banks. If you want to invest in forex, the brokers are the banks. The banks can sell you the currency you want to hold, or even you can sell to them. So if you want to buy a particular currency, whether it's a euro, pound, or a dollar, you go to bank. Brokers at the bank, and if you have them, you want to sell, you can sell to the banks. So they offer accounts. If you feel to hold a currency digitally, you will pay service fee monthly, and this is how we said brokers make money. So we said back then we said that brokers make money even with monthly fee for those accounts. So if you want to hold this currency digitally, you can open a dollar account, for example, a euro account, and you hold that money. But we said you need a lot of money even for you to accept to be cut a monthly fee every month. So, or you can hold the currency yourself at home. You can buy some dollars and you will come later and sell them. If you see them, they have appreciated in price. So, meaning your own currency, country currency is inflated. If it has inflated, then you are in profit in dollars. So if it is not inflated, then maybe your currency is stagnant, the one you are holding. In this sector, this broker, which is bank, make money on spreads, which means they buy from you at a lower price and sell you at a high price. This is the spread which we talked about it. So for example, USD and Kenya shillings is quoted at 140. So the bid would be 139.50 and the ask will be 142.00. So you could see, if you are coming, they would bid their price at a lower, meaning that if you have some cash that you want to exchange, this is the price they would buy from you. If you have the dollars, they would buy at maybe at 139.50, and when you think of coming back and to buy from them, they will sell you at a higher price. So you can see the difference. This is the spread which we talked about. Now there's the difference of each of the two, which is 2.5 shillings. That's the spread. They have even screens on their wall displaying that. That's how you can interact with Forex with this model of investing. The banks are Standard Charter. When you are in Kenya, you have KCB, Cooperative Bank. They have those dollar accounts if you are in Kenya. But people prefer stocks mostly, but it's good to learn when it comes to forex. So, and in terms of investing, so in the next lesson we are going to the next asset, which is stocks, and stay tuned. So here we have a little quote, which is forex, the global economic marketplace for trading international currencies and currency derivatives. So that is the simplicity of what we have learned about investing in forex. This is investing. in Forex. So this is slightly different from what you would think when it comes to the word Forex. But don't forget that in CFD trading, this was the source of the current system that we use in trading to CFD, which we learn when we go into CFD. But when it comes to investing, real investing into the asset itself, whether it's those different currencies, this is the way. And we have seen the brokers in this sector are the banks, so you can buy from the bank the currency you want, you hold it at home or you hold it in those digital accounts which you can hold those currency, and when you change they will change with the current market price at that time. If you are in profit, you'll get that money. If you are in loss, you'll have to pay that money. That's how it works. So the next lesson is stocks. So stay tuned and thank you. Make sure you subscribe and turn the notification bell for the future videos. Thank you very much.